What is up, everybody? This is S Trades, and this is day 11 of the bootcamp. And in this video, we're going to be going over how to read news data for the markets, which is a very important factor, which surprisingly not a lot of people know of. So, without further ado, let's get straight into the video. So, for those that have kind of some experience in the markets, you guys probably seen market kind of do like very volatile moves at certain periods of time, like for example at 8:30 or 10 a.m. You would see some of the times where the market would just pump or dump super quickly, right? You would see like massive candles like this leaving off like wicks on both ends, right? And in previous video, me talking about like data highs and data lows, right? That would kind of stem from the news dropping in the market, right? So it is very important for you guys to understand how to kind of understand news, but most importantly know when they're happening and when you should place the trades or not on that certain day, because a lot of the times they're super volatile and you could get stopped out within seconds. You could blow accounts, you could experience slippage when you get filled at a certain price or your stop loss doesn't like actually register if it hits it, right? And I've personally experienced that myself when I would enter a trade without knowing that there's news happening at 10 a.m. and then there's like a big massive candle that would happen, and then I would get stopped out and my account would get blown, even though I didn't lose, like for example, $2,000 on a funded account, but I would still lose the whole account because I just experienced slippage. So yeah, so how do you actually read news, and where can you check when they come out and stuff like that? So primarily the only website that I really use is Forex Factory to just check my news, what like when are news dropping, what time, and how high of an impact they are, right? So it's called forexfactory.com, and it's very popular. A lot of people use it, right? So what you would do is, right, so you go on this website every single day or the night before the trading date whenever you chart, right? And once you're on the website, right, yours won't really look like this at the beginning, right? So let me just fix it up real quick. So when you first arrive to Forex Factory, this is kind of how your calendar will look like. It'll be filled with a bunch of news like yellow folder, red, orange, and then all of the different pairs and stuff like that, right? So since we're only trading the NASDAQ and the S&P, right, you could filter out to only the news that kind of mattered towards your market, right? So once you're on the website, go ahead and click on filter, right? Remove the yellow folder, right? Because you don't really need the yellow folder. It doesn't really do much in the market. It doesn't really move the markets at all. The only ones that you want to keep is the yellow and the orange and the gray ones as well, because the gray ones kind of tell you the bank holidays whenever the markets are closed and things like that. So keep these three colors for the expected impact, right? And then for the currencies, right, remove pretty much everything besides USD, right? So you'll be left with this. So the red, orange folder, gray folder, and the USD. Click apply filter, and then you'll be seeing something like this, right? Orange folders and red folders are the ones that you want to pay attention to, right? So how it would look like, right? So you have your gray folder to kind of just tell you maybe like whatever's happening from this time. It's a daylight savings time shift, right? And then it would have all the yellow, all the orange and red folders, right? So the top four kind of news to pay attention to mostly would be CPI, right, which is this, FOMC, which is this right here, right, PPI, which is this right here, and NFP, which is non-farm payrolls, right? So these four are pretty much what move the market the most. They're the ones that cause the most volatility in the markets, right? They're the ones that literally just go up and down 200, 300 points easily within seconds, right? So those are the top four, but it doesn't mean that you don't really necessarily look at other folders. For example, there's President Trump speak folders, right? Which, for example, happening at 5 o'clock, right? This, although it's orange folder, but for example, in the current market, whenever Trump hops on the mic and starts saying anything, the market just goes up and down thousands and thousands of points, which is even more than the CPI and the FOMC, right? So you want to pay attention to kind of where the market is at. So currently for us, whenever President Trump is speaking, it's very important. So this shouldn't actually be orange. This should be red or even worse, right? Because it causes lots and lots of volatility. And so how do you actually read the news, right? So you don't necessarily as a day trader need to know exactly what the news data coming out, kind of what to interpret of it, because you won't really have the time to react off of it. But just if you wanted to know, right? So let's look at CPI, right? So what are all these numbers? They might look a little scary, right? But it is pretty simple, right? So right, you have the data whenever the news are coming out. Then you have the time, which is 8:30 a.m. and everything is Eastern Standard Time, right? So 8:30 Eastern Time, right? And then you see what's coming out for that certain period of time, right? So at 8:30 we have core CPI, CPI month over month, and CPI year over year. And then going over to the right side, you have the actual, the forecast, and the previous, right? So the forecast, right, is pretty much what the analysts and the news people are pretty much forecasting the news to come out, right? And then previous, obviously, is what the CPI was pretty much previous month, right? And the actual will drop when the 8:30 a.m. hits, right? So you won't really see this number. So you'll be seeing it something like this. So you see how you have the forecast up in here, then you have the previous numbers, and you won't really have the actual numbers because you don't know what's the news, so you don't know what the news came out to be. So you pretty much have nothing at that field. So now taking a quick look at this, right? So again, like I said, you don't necessarily need to know what these numbers mean and how they impact the market, but just having like a general source of knowledge would help you out, right? So let's say you click on CPI month over month, right? So the forecasted period was 0.3% and the previous were 0.5%, right? So once you click on this little folder, right, to kind of open it up and see what it means, right, you're going to get a lot more details. So for example, source, where's this news coming from? What does the CPI month over month measures as changing the price of goods and services purchased by consumers, right? And then this is where you kind of would pay attention to the most, right? So it says usual effect, and it would tell you how this news event would impact the market, right? So in this case, it says actual greater than forecast is good for currency, right? So let me come back to this in a second, but frequency, again, it shows you it's released every month, right? And then I'll tell you when's the next release date, and then why would traders care, right? You could read this yourself, and then derived from an accurate explain doesn't really matter. But then you also have some of the related stories down here, for example, like other articles or other news kind of correlated to CPI. Now you could take a quick look at all of these other articles if you're more towards like swing trading or more fundamental analysis, right? So, but in terms of day trading, you don't really need to pay attention to much of this at all, right? But just for you to have a general understanding of what it means. So this is pretty much all you would look at, right? So for example, it literally tells you what it means. So actual, which is right here, greater than forecast would be good for currency, right? So when it's talking about currency, it's talking about the US dollar, right? But we're not trading the forex pairs, we're trading the indices, right? We're trading the S&P, we're trading the Nasdaq, right? So so in this case, it would be the inverse of it, right? So what CPI is pretty much measuring the inflation, right? So if you're thinking about it, yes, actual greater than forecast, meaning if the inflation is higher, then it would be good for the currency, but it would be bad for the stocks, right? It would be bad for the S&P and the Nasdaq, right? So in this case, right, actual came out to be lower, which is 0.2%, right, than the forecast. So it's 0.3, right? So then that means this is bad for the currency, but it's good for the indices like the S&P and the Nasdaq, right? So now if you take a quick look at the chart, right, this was on March 12, right? We're in March 12 right here at 8:30 a.m. So this is the candle, right? So as you guys could see, right, previous candle is very, very tiny, very small, right? And then the moment the candle opens up for the 8:30, you see massive spike high, right? So you see this candle literally just made 200 points, like just up and down, like it was nothing, right? So now, as you guys could see, since the CPI, which is the inflation, came out to be lower than forecasted, then is good for the markets, for the Nasdaq and the S&P, right? Which is why you have this bullish candle right now. The only problem is you can't really account that for the entire bias for the day, right? So let's say if the CPI came lower, right, it doesn't necessarily mean that the whole day is going to be bullish and the stocks are just pretty much going to go up higher, right? Because a lot of the times the market's already accounting for the news and things like that, so you don't really have the time to react off of it. So in this case, right, yeah, although the news were bullish, right, and kind of we see a little bit of a follow through, but pretty much after that we just kind of dump and then pump. So you can't really just go based exactly off what the news came out to be. Although yes, like inflation coming out to be lower is good for the S&P and the Nasdaq, but then what happened? We just pretty much go lower. We don't really see like a lot of follow through, right? So taking a quick look at another example, right, for FOMC, which is again a very, very volatile market news that come out in the market, right? So this is coming on March 19th at 2 o'clock and 2:30 p.m., right? So we have federal funds rate, FOMC economic projections, FOMC statement, and then at 2:30 we have FOMC press conference, right? So at Wednesday 19, if you take a quick look at this, right? So what happens, right? At 2 o'clock, you see this massive candle get put up in the market, right? Literally 135 points. You see this massive wick get left below, pretty much taking out all the levels over here and over here, and also making a wick up higher. And then you see lots and lots of volatility start to kick in the market, right? Price ends up rallying at 230 right here. Again, another massive candle ends up coming through, and then now you start to see lots and lots of volatility in the market, right? So in these scenarios, right, when you have big news like FOMC, CPI, and things like that, especially if, for example, FOMC is coming out in the PM session, right, what tends to happen is in the AM session you wouldn't really see much of decent price action because the market's pretty much waiting for the big news to come out to actually get to put up the volatility in the markets, right? So if you take a quick look at the AM, right, we're not really doing much here. We just pretty much went up a little bit, came back down, went up, came back down. Like we're not really doing much of anything, right? The candles are pretty small, right? We're having a lot of wicks left and right. We're not really seeing decent price action, right? So then once the PM hits, once the FOMC ends up opening, right? So then we start to see lots of volatility kick in, and we actually start to see some sort of a direction, right? So in this case, right, for FOMC, you can't really read it from here, right? Because you would need to watch Powell speak live. This is when Powell comes on stage, and then whenever he starts talking about the economic projections, if he wants to lower or raise interest rates and things like that, if the job markets are good and all the sorts of economic stuff for the markets, right? So you wouldn't be able to tell what's happening here, although you would get like summaries and the related stories, right? You kind of see quick summaries of what's going on. So that's what I'm saying. You don't necessarily need to know exactly what's happening, but unless you're swing trading or doing more of like fundamental analysis, so if you're holding any stocks for a long period of time, then this is absolutely necessary for you to understand like what did Powell say about the job market, what did Powell say about interest rates and things like that, right? That would be very important to you if you're holding things overnight and for more than like a few days, right? But for us day traders, it's not necessarily that it's not important. Like for example, like right here, he might have talked about lowering interest rates, and then boom, price ends up going higher. So you could potentially use that as like a directional bias for a certain period of time. But again, like I said, it can't really put that bias for the entire day because a lot of the times the price and the market already priced in the market news before you even thought of it, right? So you don't need to necessarily like rely on whatever the market news drop tell you, right? Because you're just gonna most likely get stopped out. So don't try to predict what's gonna happen in the market because a lot of the times these big institutions and firms already accounted what's gonna happen and they most likely already know what's happening, right? So they're gonna do a lot of manipulation and then they'll move their markets to wherever they want to, right? So take a quick look at more examples, right? So for example, April 2nd, right, we have non-farm employment change, and then we have Trump speaking at 4 o'clock, right? So if you take a quick look at this, right, so price is already indicating possible like whatever Trump is thinking to say, right? So price ends up kind of going up high, right, making a fake move higher, right? People might be thinking, okay, we might be bullish right here, starting to entering longs, right? And then boom, once the 4 o'clock hits, we see this massive candle, right, manipulate higher and taking out all of this liquidity, right, on the left. And then we start to see the actual real move, which is all of this move down, which is literally 1,300 points down right after Trump spoke, right? He probably talked about tariffs that day, so which is pretty much why the markets ended up dumping. So you want to be aware of what's happening in the markets, right? You don't want to just be blindly entering positions that you don't know like what's currently happening in the market, right? So in this case, this is when Trump announced the tariffs, like the massive tariffs on China, right? Then price ended up dumping, right? And then we kind of start to see follow through lower. And then again, this would be very significant if you're swing trading, right? Because if Trump announces this negative news for tariffs on China, right, you don't want to be entering longs and hoping that price goes up, because now obviously this is going to be impacted on the markets and it's going to go a lot lower, right? In this case, it did, right? So we're looking at April 4th, right? On Friday, we have non-farm employment change, right? Unemployment rate, and then Powell speaking. And you start to see that the markets, again, are very volatile, right? We have literally 600 points down, retracement of 500 points, going lower again, 538 points, right? So you see lots and lots of volatility in the market. Then the market, as market closes, right? And as Powell starts to speak and all the other news, right? Prices just keeps on going lower because of the tariffs, right? For example, this is very important because if you're not aware of what's happening, you're going to be getting stopped out a lot. You're going to be losing a lot more often, right? So for example, here, right, when market pretty much pumped up like 2,000 points, right? This is when Trump paused the tariffs for 90 days, right? So you could potentially capitalize on these market news, but I don't really suggest you guys to, because it's very, very risky, right? So what was the whole point of you understanding the news and like what time it drops? Because you never want to actually trade at the time of the news drop or before. So for example, like if you're trading the afternoon session, right, and then you see that there's FOMC at 2 o'clock, right, most likely you won't have decent price action going in the morning, right? And you would never want to enter a trade at 2 exactly at 2 p.m. because most likely you're going to get stopped out and manipulated, right? So don't be entering trades on high impact news at the time of the news drop, right? You'd want to kind of wait 5-10 minutes or even a lot more just to kind of see what's price doing, let price settle down, and kind of have an understanding of where price action is going, right? Because you can't really predict where the market is going to go, because a lot of the times it will make a fake move towards one side and then pump or dump to the opposite side, right? So a lot of times in these heavy volatile market conditions, right, you want to be a lot patient. You don't want to be taking stupid setups, because these news, right, the market accounts for it, right? So you're not going to really see, like I said, decent setups, for example, in the AM session when you have the FOMC in the PM, because most of the volatility is going to be kept for when the actual FOMC drops, and then that's when you're going to start seeing very big moves, right? And say, for example, for CPI, right, let's say if you trade the pre-market, right, and you have the CPI dropping at 8:30, right, you don't necessarily want to enter a trade exactly at 8:30 a.m. You have to kind of wait and see where price is going, especially with CPI. A lot of the times that's fake moves, right? So for example, like I showed you guys earlier, although CPI came out to be lower, right, which is good for the stocks, we saw like a little fake move higher, but then the rest of the day we kind of just dumped, right? So you have to see and wait on how the market and price action is developing throughout the day, right? You don't want to just jump into random trades during these news time, because a lot of times you're going to lose a lot of money on it. But every morning or whenever you guys do charting or pre-market, right, you guys want to come into for a forex factor, right? Check out the news for the entire week, right? So let's say, for example, like Monday, right, you don't have any news. Sometimes market tends to be slow, right, because you have all the other news coming out, like heavy news coming out on Tuesday, Wednesday, Thursday, and Friday, right? So most of the volatility will be getting kept in there. It's not necessarily that Monday is guaranteed to be bad and you're not going to have any setups, but you would want to kind of be cautious, maybe like risk down a little bit, right, to kind of have more of the risk allocated towards later of the week, right? And it's not necessarily that the news are bad, because news is what kind of brings the volatility in the markets, and without volatility, us day traders aren't going to be really getting any money at all, right? So news are bad for people like that are investing for long term, because they don't want to see these spikes in their portfolio going up and down super like fast, right? But for us day traders, we need news, we need the volatility in the market. So it's not like you see news as bad. Like, no, don't think of that. It's not like you need news to trade, and don't listen to those people that say don't trade at the news, whatever. Like a lot of the times people, whenever they see news, they just don't trade the entire day. Like that's stupid, because at that point, like there's news coming out every single day and you're never going to actually get to trade, right? And I'm not like suggesting for you to go and over trade, but at the same time, like, yes, like don't trade during the news drop or before, right? Kind of wait and see how the market settles, but doesn't mean that, for example, if CPI is dropping at 8:30, let's say I'm not going to trade the whole entire day because it's a red folder. Like, no, it's if anything, this is going to help you out, right? But yeah, like I said, whenever there's heavy volatile market news that are dropping, the red and orange folder, right, a lot of the times I suggest you guys to kind of size down, right, manage your risk better. Don't trade at the news open, right? Don't trade before the news. Kind of wait and see after the news develop what happens after, right? So yeah, that was about it. Just a quick video about news, right? And like for previous videos, I was talking about data highs and data lows. That's when you'll start to see these wicks that happen, right? You see a lot of these wicks happening, right? A lot of these big massive candles that they leave off of the data highs and data lows, right? That develops from a news candle, right? So a lot of times when the news candles drop, those data highs and data lows, like I explained in the previous liquidity video, are very, very important, because lots of liquidity are resting there. The market was super fast and inefficient for like a lot of buyers and sellers to actually get into the market. So price will kind of come back to those wicks and take out those levels. So that was about it for this video, guys, and I'll see you guys in the next one.